And welcome, folks, to our latest episode of Herring Gene Hole and Sweatin Money. We may or may not have ownership or other positions in the stocks mentioned on this show. Don't buy stocks based solely off of what you hear from this podcast, and always do your own homework and research before investing in stocks. I'm your host, Kong, along with my co-host, Gibson. So let's take a look at what's in the news. After the terrorist attacks in Paris by extremists, markets around the world started dropping. Reuters says that this may not be enough, however, to sway the U.S. Federal Reserve from changing course on raising rates in December, and it was expected that today's performance would follow the rest of the world. That didn't happen, however, and all indexes jumped. More on that later. One of the big news to help bolster U.S. stocks today was the Marriott International's purchase of Starwood Hotels, which also includes Starwood Hotels and Resorts and their series of hotels like the Westin, St. Regis, Four Points, and others, and their two real estate investment trusts, or REITs, such as the Starwood Property Trust, Inc. and Starwood Waywood Residential Trust, as well as other private organizations under their brand, and of course, including their worldwide assets. This will make them the world's largest hotel chain.
So which topic you want me to comment on here? I feel like I want to jump in right everything. So
Do you have membership with Starwood? I used to, but I let my stuff expired.
no, never had any membership in Starwood. Is it Starwood?
Yeah, Starwood.
Yeah, I was thinking about the Hilton hotels. Even then I don't have it.
Oh, wow.
Yeah, I remember looking into like Hilton cards though for the Hilton points.
Yeah.
But then again, I don't stay in hotels often enough to merit it.
Yeah, well, I mean, I don't anymore, but I used to. One of the worries that people are having is that Starwood Hotels points are a lot more generous, and it's a lot more easy to achieve, some sort of like elite status of some sort. Whereas opposed to Marriott, there's a lot more restrictions, and a lot more issues as far as like needing to maintain it, how to maintain it, and all that. So people are kind of worried about that. But aside from that, I mean, I don't know. We'll see.
So just the Marriott's bought out the Starwood, right?
Yeah.
So I'm guessing that's the reason why. Maybe Starwood's a little bit too generous.
Maybe. Who knows? Well, in any case, the U.S. has charged 3 Israelis for hacking into J.P. Morgan Chase last year, stealing tons of data and information. The group behind this hack also targeted E-Trade and Scottrade, while TD Ameritrade and News Corp's Dow Jones unit says they were targeted as well.
So is it recent?
This just came out like this weekend.
So were they hacked this weekend?
Oh no, they were hacked like last year.
Yeah, not sure if it's gonna have a dramatic effect on their stocks. I mean, it's last year.
Oh
so
yeah, it's probably not going to affect them all that much, but these guys are caught, so yeah.
It's concerning. Good thing I have shares in Bank of America. I'm like, all right, but I'm not too sure. At least when I was hearing you talk about it, I was listening in on whether or not Bank of America was actually included on that list. So I'm kind of glad it isn't.
I'm sure it's just a matter of time. This is just another case where cybercrime is on the rise, and these are some of the bigger examples. So
I imagine cybercrime is always present. I think, part of the reasons why I would hope that all these larger institutions would be investing more into IT team to prevent such like attempts in the future, or can be vigilant against it.
Well, one would hope.
Hopefully, keep my fingers crossed. If not, make sure to short the stocks.
Yeah, seriously. The OECD's predictions on China's economic performance says it will cool down to 6.5% next year and then dip to 6.2% the year after.
That makes perfect sense to me.
Yeah, well, it's not on here, but I did read another article that China's economy is actually much more lower. The economic performance is not as good as they officially say it is, and everyone suspects that. But then, of course, as usual, there are lies, damn lies, and then there are statistics. So we'll see.
That's true. But it makes perfect sense because they're shifting. Their economy is shifting from a labor-based economy to more of a consumer-based or a service-type economy. Or they're gradually, and this is mainly due to the currency manipulation and how they're supposedly no longer doing it or avoiding it. And because of that, the RMB is no longer going to be the cheapest currency, or it won't be as cheap as it used to be. So it wouldn't be as cheap to hire to have everything made in China anymore. So because of that, I imagine a lot of the labor will shift away from it, and that could cause GDP or the exports to go down.
Well, we'll see. And while it was Veterans Day on November 11th for most of the Western world, in China it's more known by a holiday known as Guanggunjie, or Singles Day. I won't get into the actual meaning of Guanggun, but what started as a college student's joke, it spread all throughout the country and has become a major commercial holiday. For e-commerce giant Alibaba, they had their best day on record, making $13.4 billion in a single day. PC World says this is equal to 2 months of Amazon's profits. However, record-breaking profits didn't translate into investor sentiment, as they still face pending lawsuits. Their stock had fallen almost 2%, and it kept dropping for the rest of the week. So like I said, man, Alibaba, gotta short it.
Yeah, I don't know. At the very least, it's worth a straddle play, at the very least, which I should probably get on that for sure. I don't know. Is there a lot of volatility in the charts, you see?
It's nothing but dropping. I mean, they've been dropping like crazy ever since they even came on the market.
That's true. Probably a safe bet.
And especially with the IP lawsuits, IP is a big thing. I mean, China keeps on saying how they've improved on their IP situation, yada, yada, yada. Come on. I mean, when Jack Ma is saying he'd rather protect the interests of people who are selling fake goods rather than, big business interests, then, that's, he's asking for it pretty much. But anyways, so London housing prices have popped their bubble. What does this mean for the U.S.? Even though Britain's military might may no longer be the colonial power it once was, it's still a major international financial juggernaut. So will this affect Britain's economy and affect the rest of the world, just like the U.S. situation back in 2008? Or do you think it's just going to be like, meh?
I don't really quite understand how Britain can command a higher currency value than the United States, because I don't quite understand exactly what Britain provides the entire world. What do they export?
That's a good question.
Doctor Who. That's what.
Yep.
Just kidding.
Yep.
But no, I honestly, frankly speaking, I do not know what they export. Like it's an island.
They don't export anything. I mean, like you said, like China's making that transition into being a service-based economy. I mean, England has already been a service-based economy for a long, long time, and partially because of that, but also because of their former status as a colonial power, they still have a lot of major financial institutions around the world. I mean, they helped shape finances in their mold.
I see.
So
maybe that's what they're offering, and that's the service they're providing.
Yeah, I mean that, and also London is also another major tech hub as well, at least in one of the major tech hubs in Europe. So
interesting.
Yeah, Google, Apple, all the major tech companies have a giant presence over there as well. So
yeah, I wouldn't understand how these things are factored in. Because then, technically speaking, though, the supply of real estate is finite, extremely more so because it's an island.
Yeah, and especially in London. Geez.
Yeah, so why would it go down per se? And I wonder the implications of it. Like, does that mean that people became poorer? Is that why it burst?
I don't know. I just know that London is one of the most expensive cities in the world. So,
don't know.
No, well. Apparently, the deal that was originally struck between the United Auto Workers and General Motors was only tentative and ran into trouble when it was completely rejected by the skilled workers. Originally, the tentative deal was agreed upon because factory workers outnumbered skilled workers, people who do the maintenance within the factory but are not part of the assembly line, and their vote won out. But the skilled workers fought back, and both the UAW and GM and deadlines were further extended.
Oh no. Don't know what to say about that. Skilled versus unskilled.
Well, okay.
There's more unskilled labor versus skilled labor.
Well, it sucks to be GM for now, I guess.
I know. I was thinking, is this one of those things where they have a labor union for skilled workers and a labor union for unskilled workers?
They're all covered under the same umbrella, the UAW. It's just that I guess they're kind of like two different factions.
Yeah.
Yeah. So then there are those who work on the assembly line,
and both factions both want more money from GM.
Well, no, originally the unskilled workers, the ones that were working on the assembly lines, even though they outnumbered the skilled workers, they had originally agreed to the framework that UAW and GM were talked about, but then the skilled workers, basically the maintenance folk, plumbers, all the other maintenance people at the factory, said that they didn't like the deal. So they made a huge issue out of it, and so now UAW and GM are in more talks.
Great.
Well,
bad news for the stocks, I think.
Yeah, probably, but oh well. So the World Economic Forum takes a look at leniency programs for tax evaders and looks into the moral hazard of letting tax evaders who willingly expose themselves go away with a minuscule, or in most cases, no fines at all, when tax evasion crackdowns are intensifying. According to the article, there are only a huge number of there are a large number of people that turn themselves in only when the tax evasion methods become harder and harder. Some people argue that allowing these people to only pay the taxes that they owe without any punitive fines and punishments only encourage people to continue to evade taxes. So what are your thoughts?
Agreed. Technically, I wonder if it's evading taxes, or is it simply taking advantage of the loophole, or just paying your fair share. By fair share, basically, well, I'm like, hey, I took advantage of all the tax breaks and all these other things, so is it my fault I don't pay as much tax as everyone else? Don't know. For example, Warren Buffett supposedly pays a lower effective tax rate than his secretary, right? Yeah. Is he evading taxes, or is he just benefiting from taking advantage of all the tax laws we have? I wonder what evading actually means.
Yeah, that is a good question. So, I mean, yeah.
But all in all, I think they will, economics is all about rational thinking and rational thoughts. And if it's, it makes sense to just keep evading because there's no penalty for it. So why not?
Yeah, but even if there is a heavy penalty for it, doesn't mean that they're going to stop anyways. They're just going to keep doing it until, they get caught. At which point, I mean, like, hey, they've lived a good life and done.
Yeah, and there's also the time value of money, just how much long all the tax money they owe, they essentially borrowed it for whatever duration it was,
Yeah. I mean, they pay enough to these wealth managers to save them enough money that it's actually worth paying these guys for their services. So, whatever.
Exactly.
Well, anyways, under the rumors that the Federal Reserve may raise rates, Treasury notes have been selling at record numbers, but have been offering lower rates than before. So
that makes perfect sense. I mean, if you wait a bit longer to get you get into Treasury notes, you probably can ask for a higher rate, right? That's what they're saying.
Probably.
Is that in future the rate's going to be higher. And in fact, there's a lot of sentiment and there's a lot of news articles right now saying that December is the for sure date that they're going to raise the interest rate, because there is really, I think the United States is undergoing something called price inflation.
Yeah.
So, because people have so much money that just to spend on things that people feel confident in raising the prices now.
Yeah. So, the World Economic Forum collaborated with Reuters to talk about the International Monetary Fund's possible implications of adopting the Chinese RMB as a reserve currency, which the decision will be made by the end of this month. The criteria to become a reserve currency are as follows. 1, the currency must be issued by a top exporting country or union of nations using the same currency for more than 5 years. 2, it must be freely usable, as in widely used to make international payments and widely traded in major currency markets. When last reviewed in 2010, the RMB did not meet the criteria of being freely usable.
So why didn't it meet the requirement? Why is it? What does it truly mean to be freely usable?
The fact that people beyond North Korea, that is, are actually using the Chinese RMB. So wherever it basically has to be flowing. Like, how, say, for instance, in many other nations, whenever they do transactions, they use the American currency because it's the de facto stable currency.
Sure.
Yeah. So same thing with China. So even though they're one of the largest exporters for more than 5 years at least, as far as being freely usable, not a lot of people are going around saying compared to the U.S. dollar or the Chinese RMB, what are you going to use? People are still using the U.S. dollar, but I mean the Chinese RMB is kind of gaining there, but it's in a lot of places, say certain places in Africa, But like, Latin America is still using the dollar, so
I'm just wondering, does it mean like the euro? Like, let's say I have like a bunch of euros, and I'm
Right.
an American restaurant, right? Are they
Yeah.
supposed to accept my payment in euros, or do they say, hey, we only do American currency, greenbacks only?
Uh, well, that's actually one of the things that people suspect that we actually went to war with Iraq for. They say that the reason why we actually went to war against them is that Saddam Hussein, months prior to us declaring our attack on them, said that he was actually going to switch the international transaction currency from U.S. dollars to the euro instead. And some people think that like this actually would have given Iraq a little bit more bang for their buck using the euro as the standard currency as opposed to using the US dollar as far as like transaction fees and all this other stuff goes. So that's another thing that also helps make currencies like freely usable, I guess. It depends on a lot of different factors. Your economy, whether or not it's stable, some other stuff too. Yeah.
Yeah, I don't know. I'm just saying, I don't know what it means to be freely usable, but either way, until I do, I don't think I can comment too much on the implications of that.
Okay.
Although I do, my concern regarding the Chinese currency is that it's so easily manipulable, as time has proven, or history has proven, that it does concern me how it will factor into the major scheme of things. And yeah, I'm just curious how this pans out.
supposedly they'd already made quote unquote reforms against these issues so that they could actually become an international reserve currency. But we shall see. We shall see what the IMF says.
For sure.
And let's take a look at what the week in review. Sorry. So, yeah. Last week was actually pretty bad. Overall, the Dow Jones had dropped 202 points at the end of the day. The SP 500, more than 23, and the Nasdaq by like almost 78 points, and that was only Friday. So if you look at part of the reason behind that, sorry, I'm losing my train of thought here.
So the reason behind the drop?
Basically everyone was saying like a lot of the retailers were underperforming and things like that.
Oh yeah, for sure. Like Macy's and all these other storefronts were basically not as having a high sell as they were hoping for.
Yeah, pretty much.
And yeah,
like even the tech giants, like in this article, it's saying that like they weren't doing too good either. So
although supposedly they might have been losing their just sales to Amazon, I think. At least I remember glancing at how Amazon was mentioned in the drop in retail.
Yeah.
So bad news for everyone else. Great news for Amazon.
Well, maybe. So, but yeah, let's look at today's performance. So whatever losses we had on Friday were actually made up today because the Dow Jones had risen up by 237 points, S&P 500 rose by 30 points, and the Nasdaq was up 56 points. Despite the French terrorist attacks and compared to poor international market performance, the U.S. came in strong, wiping out Friday's losses. But it doesn't account for last Mondays and Tuesdays and Wednesdays and Thursdays drops. So, meh.
I don't know. It's a little bit tough. I think a part of the drop is just the concern that the Fed's what the implication of the impending Fed interest rate hikes are going to be. Then part of it is the lackluster sales performance of all these retailers and implications of possibly being bad for the economy.
Yeah.
But then they come to conclude. I think some other reports are saying, oh, yeah, the Feds are coming together, raise interest rates because people are just spending so much more money on everything else and that they have to do it just because inflation is climbing a lot higher than expected, So then that's like also good news. And then, I don't know, maybe, like they're just thinking that they overreacted by selling everything as well. And I think coming soon is if you have a dividend stock, the dividends the fourth quarter dividends are coming. So I think it's a good time to possibly hold, and then maybe the United States isn't doing as bad as everyone's panicking about. And then with the French attacks, I don't think is as big of a concern. So if anything, maybe today was seen as an opportunity to buy in a time period where everyone was panicking and trying to sell. Like, hey, you know what? You guys were probably over spooked because it's like 200 something people dying in France, and in the big scheme of things, people dying over oil and all these other things all the time, and we don't freak out about it like we're doing now. Plus, we had all these United States church bombings and school shootings, and they didn't tank the market.
Right.
So why would a few deaths now, I wouldn't say I'm not saying like these deaths are to look down upon or were absolutely significant, but I'm pretty sure there's a lot of thought process on it saying, well, why would a few hundred people dying in France drag tanked the entire United States market down? They wouldn't seem, in a big scheme of things, it wouldn't seem to have mirrored the reaction the rest of the world was taking. So maybe everyone thought today was a good time to buy for that.
Maybe.
I don't know.
Yeah.
But it's a possible thought process. Who knows, really?
Yeah. And let's take a look at what's in our portfolio. And when I say ours, I really mean mine.
You know what my portfolio consists of? One
Yeah.
stock right now.
Well, McDonald's decided to raise its dividends from 85 cents per share to 89 cents per share to return more to its investors. It also decided not to spin off a real estate investment trust. McDonald's usually collects rent from its franchisees, and when they closed a couple locations, they also sold off quite a bit of land.
All right.
Yeah. So it kind of goes back to what you were talking about last week with Costco, buying up land and, leasing it out to other people and all that stuff.
Clever people. Very clever.
Yeah. Also on Tuesday, 12:56 p.m. Eastern Standard Time, shares of McDonald's were shortly halted right before its scheduled November investor meeting at 1 p.m. During this time, people were wondering what was going on. Some said the hamburger was arrested for grand theft larceny or being drunk on a coke-fueled brawl with McNogs for Christmas.
Totally what happened. Then Ronald had to make them all a happy family again. Good job, Ron. Good job.
Yeah. Nice job, Ron. Thanks for, helping my stocks stay where they're at.
I do believe in your magic. Just let you know.
As long as it keeps making me money. But hey, analysts looked at Berkshire Hathaway's shares holdings released at the end of September. It's pretty bad, for me at least. And found out that they shedded shares of Goldman Sachs. I don't care about them. And Wal-Mart. I do care about them because I do have holdings in Wal-Mart.
No.
However, the excuse the head of Berkshire Hathaway, Warren Buffett, has given was that he was freeing up cash to purchase shares of Precision Castparts Corp, an aerospace engineer maker. The announcement to purchase was made well back in August. S&P put Berkshire Hathaway on credit watch negative.
Not good. But, with Buffett's investment strategy, it's pretty much you can do whatever he wants. I think I did take a look at an article, I think a couple of days or today, regarding Buffett's strategy and the things he owned. Is that he's bought everything at such a low price, and he's held it for such a long time, that basically the dividends already paid for the stock already altogether. Yeah. So then everything else he sits on is just pure profit. But yeah, I don't know. Buffett's an interesting guy. He doesn't invest on a ton of stocks. He just says pick a few that are really good and just hold on to it. That's been his strategy, and it seems that's the strategy he continues to stick with.
Yeah. And let's look at investing strategies. Now, I guess this is kind of more of a recommendation, so to speak. But if you are a fundamental analyst, this book is a must. Security Analysis by Benjamin Graham, Warren Buffett's mentor, and David Dodd. This was written right after the stock market crash of 1929, and they criticized the earnings trends of companies without actually looking at the company's finances. The two authors noticed a trend for Wall Street to undervalue securities that were actually healthy and saw opportunities to buy them up for cheap. The book has been revised over the years, and they're now up to the 6th edition, but you can still get replica prints of the original 1934 version.
Yeah, if you're a collector.
No. I mean, there are companies that are printing new copies of the 1934 edition. Yeah, so the original text and everything. Because, over the years, certain technology has changed, or maybe, some of the laws have changed, of course, obviously, especially after, FDR took over. He put a lot of laws in place, like Glass-Steagall and all that stuff. So
normally, I would recommend reading the most recent edition, but in this case, I do agree with Kong in the sense that, there are books where the original version is super thin, like readable thin, and then the most recent version is like 3 dictionaries slapped together. So it's so you're like, what the? And in the most recent version of the books, an attempt to cover everything and adapt to new technologies and all these same topics, that you kind of lose original like spirit of the book that was written. And I think it is useful to read the original version and read the most recent revised version, that too, just to see like how things changed.
Yeah, definitely. And on to recommendations. Here's my recommendation, Quantopian.com. No, they're not sponsors, although if they feel like becoming one, feel free to contact us. But this is a website that gives you access to user-generated algorithms, and you can also submit your own algorithms to analyze stocks. No coding experience? Well, they don't necessarily have their own academy to teach you, but they do have some good links to get started on learning the Python programming language, which is what many quants use.
I don't know about Python, but I heard a lot about MATLAB and R. So who knows?
R is definitely another one. Yeah.
Yeah, but who knows? I mean, programming's, and you can pretty much write the same program in practically all languages. So
I don't know. I've seen a lot of quants use Python.
Really?
Yeah.
Why?
I don't know.
All right.
I'm not the programmer, man.
Who knows? Who knows? Well, either way, I would say just do it just because that's the language they use, but not so much because Python might be a superior language at all. But I think might be worth playing around with. They do provide backtesting as well, so that's useful to see if the algorithm actually worked historically as well as currently, possibly in the future.
Last reminder as we end the show.